Hey, what's going on, team? It's Ricky with Tactical Solutions. Hope that you guys are all having an amazing Thursday. Today, to put it in very simple terms, I just couldn't make it happen. Every other trading session this week, I've been having a very fortunate week trading. Every day, I was nearly $2,000 profit. Today, Thursday, was a little bit different. Just like I show you my green days, I want to show you my red days. $739 is what I lost in comparison to what I've made this week. It's a very small price to pay, but I want to explain why I took this loss. And it was something that I easily could have, I would say, avoided. I was being a little hard-headed. Just like I talked about in almost every single video, I personally, and I still believe this, I think the market is overbought based off of recent market resistance levels. And I want to explain it to you based off of previous patterns for the past 2 to 3 months. If you watch my videos, I know I probably sound like a broken record, but it has. If you guys look for the past 2 months, 2 3 months, you guys can see that there's been a very common resistance level right around 11,600 forward slash NQ, and it gets rejected, it gets rejected, it gets rejected, it gets, well, what I thought was going to be rejection. I might be a little bit early to the party, and at the end of the day, like we all know, nothing ever has to follow through just because it's happened before. Like we've said before, patterns tend to repeat themselves. They don't always have to. But I wanted to explain, why is it that I was so focused on SQs? Because I thought the market was going to pull back today. And if we go on the 1 day, 1 minute chart, we were showing signs of a resistance level, but dude, the market was just super bullish today. It just would not stop recovering. And although that played in favor of TQs, I was very hard-headed with the idea that I wanted to make it with SQs because I was like, the market is so overbought. And the reason I'm sharing this with you is I think a lot of you guys can potentially relate to me, where we all have those days where sometimes, we're just in tune with the market. Every trade that we take is just, A1, right? It goes according to plan. And then there's days like this where like literally almost every single trade that I took today was just red. And my 2 day trades are SQs and TQs, so you guys can ignore the other ones. Those are ones that I'm holding overnight and stuff like that. But I wanted to update you guys on how I've been doing, also what went wrong today and how I could avoid this. One of the things that really did help me out is my position size. Although I did take a loss today, I didn't lose that much in comparison to how much I trade with, which is about $70,000 to $80,000 when I'm fully invested. The really cool thing about today is that I wasn't ever fully invested in a position because there was never a super clear direction when I was taking a position. We had an amazing live trading session within the Learn Plan Profit group. I was up when the day just started, but I quickly began to chip away from those profits because I just became very hard-headed with the idea of, hey, the market's overbought. I think it's overbought. I think it's bound to pull back. And like we know, when the market pulls back, SQs goes up. And just because of that thought and that desire of wanting to make money off of SQs, I did the exact opposite. And this just proved to show that anytime that you're trading something, I mean, I trade ETFs and inverse ETFs, so it might be a little bit different for you, but I hope that you can use this kind of like lesson and implement it into whatever it is that you are trading. I don't know what you trade. You might trade options, you might trade tech, you might trade bioscience, but sometimes regardless of how bad you want to trade something, one of the best things that you can do is maybe not take a trade at all, especially when the overall direction is not in your favor, just like for my instance, right? I feel like right now there's a lot of inconsistencies. The market's very choppy. There's a lot of different factors that can cause the market to go up or down, right? With the overall news of not talking about the stimulus check, unemployment report tomorrow, right? Making sure that, with the election, Trump with COVID, there's so many different things that can have a negative or positive influence within a very short period of time that can ultimately influence the overall market. And like we know, if Trump tweets anything, we better put our seatbelts on. But I'm still very thankful for how the day played out. I didn't lose that much in comparison to what I could have lost, and I'm very excited for the challenges that tomorrow present. I hope that this video just at least helps one person out and being able to understand that at the end of the day, direction is key, and regardless of how much you want something to happen, let's be honest, we're irrelevant. Our hopes, our desires are irrelevant to the stock market. It doesn't matter how much I want the market to sell off or how much it would make sense for the market to sell off. I feel like more often than not, that's normally where I begin to get a little bit more on the emotional side, and when I'm like, hey, like it needs to do this. At the end of the day, nothing needs to happen, and it is in my best interest to either work with the market or decide to walk away and call it a day, right? If you guys want to tune on into our live trading session for Friday, click the second link down below. I'd love to have you join. And on top of that, you guys can join our free Facebook group, which is that first link down below. So I hope that you learned something new. I hope that we earned your thumbs up. Don't forget to subscribe to the YouTube channel. I appreciate all the best wishes. Hopefully you ended it on a green note. Until next time, like always, let's make sure that we end the year on a green note. Take it easy, team.